Empire's newest talk show, covering information about loans, real estate, current topics of interest, guest speakers, and of course, fun and interesting places around the Inland Empire. And now let me introduce you to our host as seen on TV. He has owned many companies, but for the last 12 years has been doing real estate and home loans, and the owner of Affordable Home Loans, Mark Short. His sidekick has hosted his own television and radio shows and has worked his way up in corporate America. Let me introduce you to Steve Healton. And now, the Mark and Steve Show.
Well, thank you, Don Barnes, for that wonderful introduction. Don is a person that we know. He's actually done quite some television work, and he's also one of our loan officers. So if you want a famous person doing your loans, you can call us at 941-247-1113. We are sponsored by Affordable Home Loans, and that's us here at Mark Short. Mark, say hi.
Hey, Steve. How you doing today?
Well, we're doing excellent. We're running around a little crazy today because we did, on our fourth section, I'll get into that in a moment, because we were running around doing some stuff for the show today.
Hey, it's really nice out today, too.
It is. It's a wonderful day out today. And that's one thing nice about living in the Inland Empire. Our show talks about real estate and home loans in the Inland Empire and the fun places to go to, which we did, as a matter of fact,
we went
today.
to a very fun place today.
Now, we're going to be talking about 100% loans today. We're also going to be talking about VHA and FA loans and
FHA loans.
FHA loans.
This time I got to correct you.
VA and FHA. There we go. I wrote it down wrong. Sorry about that. And we're also going to have a call-in section for the people that want to call in and talk about real estate and loans. We also have a guest speaker today. It is Ron from Atlas Appraisal, and speaking on how a house is appraised and how they come up with the numbers they do and how you might be able to increase the value of your house for an appraisal.
Don't we have two guest speakers today?
Yes, and that's what I'm getting to. The second guest speaker, is Jason from the Orange Empire Railway Museum. We are out there today. We're going to be talking about that, and Jason will be with us later on in the show. But what I wanted to do is talk about, did you hear about the guy that had come home and his wife's going, well, and he's going, what? She goes, you forgot again. What? You forgot my birthday again. No. You did this last year. And he's going, well, I'm just busy. I'm sorry. She goes, look, to make up for it, I want something fast. I want something that's going from 0 to 200 in under 6 seconds in that driveway tonight. So he left. Came back in about a half hour. She's going, did you get it? And he goes, yeah, there's something in the driveway. She looks out the window, and it's a box. It's not any Ferrari. She's going, what is it? He's going, a scale. Yeah.
Well, yeah, the next day they went down to the divorce place.
Well, yeah, we see, and that benefited us. From the divorce, we got to sell the property and then, do another loan from that. So that worked out for us very well.
Yeah, I know I'd be down to the divorce place.
Yeah, well, beamed with a waffle iron probably. Well, let's talk about, first of all, let's talk about VHA and, did I do that right?
FHA and VA loans. Steve,
FHA and VA loans. I know this thing. I just wrote it down wrong.
When I first got into the real estate business, VA loans is what we did. We did VA repos, and you took your clients out, you showed them the repos. Moreno Valley was hit real hard with repos because of the Air Force Base. And
well, let's start back a little bit. What is a VA loan?
A VA loan, it's a loan. It'll be funded by a regular bank like Bank of America, Wells Fargo, but it's insured by the VA.
So it's not a loan itself?
Yeah, you do get a loan, but VA is not the one actually lending you money. VA is the one who insures the loan. So if you got a VA eligibility, you were in a service, that doesn't mean you're eligible for a loan. That just means they're going to insure it. So if you go to somebody who does VA loans and you apply for a loan, they're going to apply through a regular bank, like Bank of America or somebody, it's an outside bank. VA insures the loan, and there's an upfront fee for this.
So it's not the
loan. Usually around 2.5% up front. There's no down payment on the VA home, but there's an insurance. It's a mortgage insurance. So when you make your payment, you're also making a mortgage insurance payment, which comes along with that.
So it's going to be a higher payment overall.
Yeah, it is. VAs are 100% financing. They do give you a 100% loan, but you do need upfront. Your closing cost money is higher because there's an upfront fee for the insurance. So if you don't make your payments, something happens, you don't make your payments, it's not the bank who repos you on these, it's the VA. The VA will step in, they'll pay Bank of America back, and that's a VA loan. FHA is similar to the same way, except FHA is 3% down.
So you have to come up with 3% no matter what.
Yeah, come up with 3%, yeah. VAs are a little stricter. Nowadays, everybody's doing 100% loans, what we're getting into.
Now, you also, not only the 3% down, but also the closing costs on top of that.
Yes, the closing costs. And I can't remember, it's been a long time since I did a VA or FHA loan, because now we're doing conventional loans. Conventional loans are 100%, and there's no insurance. There's no mortgage insurance, so your payment is actually a little lower.
Now, that's one thing. We have clients that come into the office and ask they want about the VA or FHA loans, and we have to explain this to them because is it better for them to get a VA or FHA loan or a conventional loan, or is it easier?
Well, let me ask you this. Do you want to pay mortgage insurance on top of your payment, or do you just want to get a regular loan and not have to pay that?
Well, how much is mortgage insurance, a guesstimate?
Well, back when we were doing FHAs, houses were $80,000, $90,000, $100,000, and usually about $100 a month for the mortgage insurance. It's a percentage. So nowadays, if your house is $250,000, $300,000, I bet it's a couple $100 per payment.
On top of your regular payment, if you're getting that type of loan.
Yeah.
So it's easier to get a conventional loan, which we do.
Right. I haven't done an FHA loan in probably 3 years.
Now, we've got Art, who is Art is one of your employees. I deal with Art mostly. We've got Ron here from Atlas Appraisal, and we were talking about that earlier about now, Ron, you're let's see, your mic working there?
Yes.
Okay. Now, we were talking earlier while we were eating about that you have been seeing very little of these type of loans.
Absolutely.
You're FHA approved, right?
Yes, absolutely, and I've seen very few coming through since the escalation of all of pricing throughout the Southern California area.
I sold a lot of VA homes and a lot of FHA repos because repos were where it was at. Now, since the market's changed, the market's been very good for the last 4 or 5 years, and it's all conventional loans, 100%.
Now, the 100%, which we're going to get in talking to in a minute, but so basically, those type of loans have been replaced with the conventional loans because they're better.
Yeah, conventional.
Because the banks have been looking at this and the whole thing, and because the VA essentially came to reward our service personnel that they did a good job, and so they're going to help them with the insurance and make sure that the bank's going to be happy that it's covered in case anything did happen. The bank's covered. That's essentially what it does, right?
Yeah. Actually, Steve, when I was first switched over to conventional, they were 5% down, 10% down. A lot of people didn't have that kind of money, and they would switch over to VA because you only needed 3% down. And it had to actually come from the seller or from the buyer. There wasn't a whole lot of seller paying closing costs. A lot of FHA loans were the borrower actually had to have the money in the bank, or it was a gift letter from their parents.
Now, our next section, we're going to finish talking about this in a moment, but I just want to give out the call-in line, the KCAA listener call-in line. We're on KCAA 1050 AM. The call-in line is 909-888-5222. That's 888-5222. If you have questions on real estate or loans, start calling in now, and we'll get to that when we get to that section. But, again, the banks kind of looked at everything and said, okay, we're just going to offer loans that are more competitive than
well,
what
the
they're
100% is two loans. It's an 80-20 loan. The first loan, which is the large amount, usually a lower rate. When I first started doing these, they were down in the 5s. If you had decent FICO scores, they were down in the 5s. And the second was 8-9%. Now it's up there. It's around the 7s on the first loan and about 12 or 11% on the second loans.
Now, that also brings up a subject on that. Are they always 80-20 loans? I mean, on refis as well?
On a refinance, if you're taking out money and you're cashing out to the full amount, yes, it is an 80-20 loan.
Okay.
So if it's 100% financing and you've pulled all your equity out, and let's say if your loan's $400,000, your house appraises for $400,000, well, it has to be a little better because there's fees, but that would be 100% financing, and it is an 80-20 loan.
Okay, and so consequently, the 80-20 loan is like having a block of cheese, as I describe it, and you cut it off 20%, so you got 80-20. When you put it whole together, it's one whole loan for the client.
Right. Most of the time, the 80-20 loans are both from the same bank. Like we deal with Fremont a lot, and they give an 80-20 loan, and you make the payments to Fremont. Both separate house payment coupons, and then they get sold later on in the secondary market.
Now, does the 80-20 loan, if you get this, now the 20% loan, is it paid off sooner or is it paid off at the same time?
Some of them are 15, some of them are 20. Most people refinance in 2 years because it is a 2-year fixed rate. And they want to refinance it in 2 years, maybe pull out some cash and get one loan. That's the general purpose of this loan, is to get you in the house without a big down payment. And 2 years refinance, pull the cash out, put in a pool or something, and put it one loan.
Well, let's talk about like if someone's purchasing a house and they're getting the 80-20 loan, 100% loan. And it's a fairly safe loan, is it?
Yes, it is. And very easy to do.
Okay. Because about how long does the average person stay in their house?
Well, I'd say about 4 years.
Yeah, I've seen anywhere from 4 to 7.5, so somewhere in there. So the loan is not only an 80-20, but sometimes we call it a 228.
228 stands for the term of the years. Most people who get an 80-20 loan is a prepayment penalty for 2 years. So they don't want to refinance till that 2 years up, so they get a fixed rate for 2 years, and then they refinance, pull out their cash, and then they'll go into a 30-year fix or whatever they want to do after that.
Okay.
But the average person nowadays, they either refinance the first 2 years or they sell the house and buy something bigger, especially if it's a young family that buy a house and they've been there 2 years, maybe 4 years. Instead of refinance, they'll sell and upgrade into a newer house.
Yeah, because especially if it's a young couple, children enter into the picture a lot of times and all of that.
When 2 miles down the road they're building nice, beautiful houses and your house is maybe 10 or 12 years old, of course, I'd want to upgrade.
Absolutely. Now, the other thing is I was looking at when you're trying to purchase a home, like the first-time purchaser, it's getting the 100%, the 80-20. Now, what kind of financial things do they need? Do they need to pay things down first, or like if they have an auto?
If their scores are the lowest score we can do on 100% finance is 580. If you got 5.8 or better, pretty much you can get you in. But if you have several car payments and they're big, your income to debt ratios are going to be off.
Now, the income to debt ratios. Now, again, this is we have these terms in the industry.
It's a qualifying tool.
Okay, and that gives them. Well, explain what that is.
Most banks, they go off your ratios. Your ratios it goes off your income to debt, your income versus your house payment, and then your income versus your house payment plus your other bills. So you need to be. Most banks won't take you unless you qualify under 50%.
Okay. And again, if you have any questions about real estate or loans, when we get to it, give us a call. The listener line is 909-888-5222. That's 909-888-5222. Okay, now, again, on 100% loans, so we got like a young couple, and they've got mild credit. Again, they haven't established a lot, but they have some. So we're saying 580 for the FICO score, which is what?
That's the bottom.
But a FICO score is from the credit rating.
Credit port. Yeah.
Okay, and that actually reports, they figure out how likely you are to pay back on debt.
Right.
And so that's where the FICO score comes in. So the higher the better. And what we have is 100% loans at 580, which is actually not a great credit score.
Banks are starting to stiffen up a little bit more. Now they're trying to get into 600 FICO scores are better, but there's still a lot of banks out there that still do 580, and I hear a lot of talk of them going up to 600.
Okay, well, what I'm wondering is with that.
Yeah, the scale is what, 500 to 850?
Yeah.
Ron's
the
talking.
scale runs generally from 500 to 850 range.
Yeah,
right?
I think the top is 900.
Right, and it goes down to 300.
Oh, it does.
Yeah.
Yeah, so it gets pretty low, which means you can get loans, but you're going to have to put like 75% down or things like that.
You can get loans. Even with bad credit, you can get loans, but they want money down.
Right.
So if you have really, really bad credit, the bank are going to require money down.
Now, if you have really, really bad credit, again, 100% loans, we're talking maybe, well, let's back off from 100%
if you have really
loans.
bad, you can't get a 100% loan.
Okay.
You have to put money
But if you own a house and have some poor credit, but let's say the house, you bought it, you may only owe like $100,000 on it, but now we're seeing that it's worth $300,000 or $400,000, even with bad credit. What's the deal?
Right now, I'm doing a loan for somebody, and the loan to value on a house is 45%. That means that they have 55% equity in their house. And the guy does have a job, but you can't verify the income, and he has no payment history because he was paying cash to the bank. There's a couple dates when you pull up a history. And actually, his dad owned the house. The dad gave him the house 3 years ago, and they quitclaimed it into his name. He just makes the payments to dad cash. The dad goes to the bank and pays them. Well, the dad didn't make the payments on time every time, so it looks bad on him. But he has 600 FICO scores, so we're able to do his loan stated and with no proof of payment history. And he's going to get a decent rate because it is a good loan to value.
Well, that's good. That's good. So you can call us at Affordable Home Loans at area code 951-247-1113, and we can help you with loans. We have a sister company, Realty Plus, which we'll be talking about in a little bit. But we can do the loans. We have quite a few staff members, and you can work with somebody that you're very comfortable with. But Mark and I also do the loans, and we're at 951-247-1113, and we do loans. Where the farthest loan you've done?
What I like to do is I like to sit down with my client and hear the full story. I've done a loan in Needles before. I've done all over. It depends on what the client wants.
Sacramento and San Diego. I know we've done some in there, too. We don't do a lot. We're especially in Inland Empire, and that's why we're on the radio here in the Inland Empire, because that's what we're specialists in, because we know the area. We know the appraisers, like we've got Ron here, and we can talk with them to find out what makes sense.
Ron actually does a lot of appraisals for our company. We use him probably. We do about 25, 30 loans a month, so he does probably 3/4 of those loans.
Well, what looks like we do have a phone call on line 1. It's Doc. Hey, Doc.
Yes. Howdy.
Hey, Doc, you called in last week. This is.
I sure did.
Yeah.
Doc, did you call us last week?
I sure did. I want to get in that we call it the museum of the trains. I told my wife last night, and you know what? I told her last night that, honey, she's right here. She says, well, I want to get on, see that train, you know.
Hey, Doc, speak into the phone a little louder, okay?
Okay, I sure will.
Yeah. Hey, Doc, what kind of work do you do?
I'm an engineer.
Yeah, okay, Doc.
An engineer.
And we call you Doc.
Tell me, what do you want?
I'm a doctor. I'm a doctor.
Doctor of engineering.
Uh-huh.
Doc, what's the purpose for you calling in today?
Well, I've seen the commercials. I want to give me a house. I just moved down here with my son, and you know what? He told me about you guys very much, and I seen your commercials.
You saw our commercials?
On television?
On television.
Okay, Doc. Well, I'm glad at least we got one fan out there. Yeah, we have commercials on Adelphia Cable. We've got 3 different commercials running right now. You may have seen our shows.
How many?
We've got 3 different commercials. One of them I wind up in the pool.
You did? I've seen that one.
Well, Doc, well, yeah, we talked last week about loans and things like that. We kind of solved your problems, I thought, but this is interesting.
My wife says we want to get a house out here. We're from Oklahoma. You know where Muskogee, Oklahoma is?
Yeah, I know where Oklahoma is.
Well,
hey, Doc, do you remember what I told you need to bring in with you when you come in the office?
Yeah, I sure did.
What do you need to bring in?
Well, you need a piece of paper.
Well, yeah.
Don't you need W-2s, paycheck stubs?
My paycheck and what you just said.
Yeah, W-2s.
Uh-huh.
Copy of your driver's license, your Social Security card.
I made my copy for the thing, you know, my driver's license.
Yeah, we need it's what we call a needs list, Doc. We do need the driver's license, Social Security card, the paycheck stubs, W-2s. If you're refinancing, we need information from your current house, like your insurance and a current payment coupon. And we can help most, even Doc, I think we might even be able to help.
I don't think so.
Oh, maybe he needs other help.
Hey, Doc, is it true you work at the hospital there?
Yeah, I sure do.
Okay, Doc. Well, thank you so much.
I'm
And
a brain surgeon.
You're what? A brain surgeon?
I'm not sure I want that.
I don't think I'll be going over there.
No.
No. I'm over just but I'm retired.
You're retired?
I just retired about a year ago.
Oh, okay.
And you bought a Hugo?
Yeah, I bought a Hugo.
Uh-huh.
Okay, Doc.
Okay, Doc.
Okay, thanks for calling in, okay?
Anyone else that wants to call in at 909-888-5222. That's 909-888-5222. You can talk about loans. We can talk about appraisals because we're going to have Ron on here in just a minute. And as a matter of fact, let's see, it's about time anyway. We're running a few minutes early. So 888.
Any more call-ins?
Okay. Why don't we run some commercials right now? Is your computer not sounding right, not working right, or working too slow? Is your TCP/IP spilling out all over the floor? Then you need to call Red Zone Computers at 951-486-3664. They're at 24367 Sunnymead Boulevard in Moreno Valley at Sunnymead and Backway. They fix computers. They set up networks at your home or business. They can set up computers for your business from start to finish. You tell them what you want, and they set it up for you. Wireless network. Those are cool. Use your laptop anywhere in your business or your home, and it's connected to your network or the internet. They set up your business websites. You can sell things over the internet. Show everyone what you have to offer. They set up the website for affordable home loans. Scott is the manager over there, and he is an expert in the computer field. See him or any of his staff. Red Zone Computers are in Moreno Valley on Sunnymead Boulevard between Frederick and Heacock at Backway. It has a bright blue roof. It's hard to miss. Call Red Zone Computers today at 951-486-3665. That's 486-3665. Tires not what they used to be? Did the cops tell you that your tires could no longer be called tires because they did not meet the definition of a tire? Well, you need to go to Mark's One Stop, Tire and Auto. They can replace those kind of round black rubber things on your car with real tires. They have expert tire service. Not only that, but they are expert automotive repair. If you have a problem with your car, take it to them because they fix all sorts of automotive problems. From brakes to transmissions to electrical problems, call Mark's One Stop at 951-924-3384. That's 924-3384. They are located in Moreno Valley at 24300 Sunnymead Boulevard at Backway. That's 924-3384. Well, we're back on KCAA 1050 AM, leaving no listener behind. This is the Mark and Steve Show. We're talking real estate and loans, and we're also got some guests on. We're also talking about the fun places in the Inland Empire and why you should live here or move here. And we also have another phone call, and this is Diana on line 2. Go ahead, Diana. Hi, how are you doing? Welcome to the Mark and Steve Show.
Oh, thank you. I had a couple questions.
Well, yes.
My husband and I refied. We didn't take any cash out about 11 months ago. We'd like some cash to do improvements. Is it too soon to do a refi?
Now, is that how many months ago?
11 and a half, almost 12.
You can do a refinance, but there is a prepayment penalty for 2 years. You know that, right?
No, I didn't.
When you sign your lot docs, they didn't tell you that there's a 2-year prepayment penalty?
No, they didn't.
Is it a conventional loan?
Yeah, it's 30-year fixed.
30-year fixed rate. You might want to call, or I'm pretty sure there's a 2-year prepayment to it. What you can do is you can come in the office and bring your house payment coupon with you, and we can call and see if there is a prepayment penalty on it.
Yeah, we can investigate that for you. So you can call us at 951-247-1113 at Affordable Home Loans, and we'd be happy to do that.
Oh, terrific. I have another question.
Okay.
We are tenants in we were tenants in common, and we would like to convert it to joint tenancy. Can we do that at the same time, or do we have to go to the
You can do that at the same time. Yes, you can do that.
Oh, really? All at one shot, huh?
Yes, you can do that.
Absolutely.
Oh, terrific.
Well, thank you, Diana.
Thank you so much.
Bye-bye.
Okay, thank you.
We have Lee on line 1, but the phone is having a little problem on line 1, so let's
Go
see if
ahead
we
and
can get
take it.
this.
Yeah.
Lee, are you there?
Yes, I'm busy. Baba do the Baru Sunday.
Well,
Hello, Lee, are you there?
there, okay. I guess we lost Lee. Okay.
Lee? Oh,
All righty. Well, what we want to do is get on to Ron Gallio, who is with Atlas Appraisal. As a matter of fact, not just with Atlas, but he owns Atlas Appraisal. And Ron, hi, how are you doing?
how you doing,
Good.
Ron?
How are you guys?
We've got him in studio here, so this is good. Now, Ron, you've been you appraise property. You go out and look at a piece of property and say it's worth this much.
Right. We do the appraisals for the loan industry with mortgage companies and banks, and we go out and do an evaluation on the property, and then that's used in the underwriting.
Okay.
Ron, I have a few questions for you, too. On the appraisal, who is it that actually needs the appraisal when you do a do an appraisal?
The lending company.
The lending company, and what is the purpose?
It's to give them a comfort level to extend the money, and it's for the collateral. It's really it's for the worst case scenario. They're looking at it as a collateral to not overextend money beyond the actual value of the house.
What I do, I also teach the mortgage classes in our office. We have a class every week, and we teach loan processors and loan reps. And what I tell them is the appraisal is for the bank, and the bank is to check the value of the house, because a bank don't want to lend money on a house that doesn't qualify or appraise. They want to make sure the value is there.
Right.
Because if they do have to repo the home, there's no money there.
Right. They want to make sure that they can sell the home for the amount. They want to make sure that they're not overextending the amount of money beyond the house limit, so they're covering themselves.
So they're not going to give a loan on, like, if it's a house that's worth $300,000 and they're asking $400,000, you come up and say, no, it's not worth $400,000, so the bank's not going to do the loan on that.
Right. The banks are going to lend based on the loan programs, either 80%, or like you said, you have 100% programs. So those 20% seconds will probably have a higher rate, like you say.
Right.
And then that'll because of the risk factor.
Most of the houses that are out there appraising now, when you go out and do an appraisal, most of the appraisals are done off comps off of other houses that have sold in the recent area, right?
Exactly. There's like it's about a 25-item grid that goes down all the different attributes of the home. You have like the year built, the lot size, the location, and such, and those are all compared to homes that have recently sold in the neighborhood. And item by item, we go through a checklist and check and give either pluses or minuses of dollar amounts to come up with an indicated value for as compared to each of the sales in the area that are picked for the appraisal.
So if you go into an area and the houses are all appraising about $250,000, and they're common 4-bedroom houses, 2 baths, and one house in particular they're listing it for sale, and they're asking $400,000 or $450,000, and they put a lot of upgrades on the house. They put a pool, they put marble in everywhere, and they really, really overboarded it. Are they going to get all that money back? That house?
No, probably not. If it's over improved for the area, no, they wouldn't get all their money back.
Yeah, because I've run into that problem. People want to sell their house. Houses are comping around $250,000, and when they have their house, they want $400,000 for it. And you can sell the house for $400,000. Nothing's stopping you if you can get a buyer to buy it. It's not going to appraise, so your buyer is going to have to come in with cash for the difference of the amount of the appraisal, right?
That's correct. Generally, items the main items that can help the value on a house are obviously the square footage of the home. That's
Right.
probably the number one way a homeowner can increase the value of that home is to increase the size of it.
Now,
The
are we
other-
saying the size of the entire thing?
Yes.
That's including
Living
the
area.
garage, or you're talking
No.
just living
No,
area?
just the living area.
You don't
Creating
wanna-
like family rooms or bedrooms or baths, interior living area to increase the size of the home is the number one way to increase the value of that
So
home.
it's living area.
The living
And they don't
area.
mean to shut the garage doors off and make that a living area. Isn't it that every house nowadays they have to have a 2-car garage?
Yeah, and most cities are now requiring that if you convert your garage into living area, they will require you to have at least minimum covered parking. To have at least a carport.
So you could actually, if the garage was attached and it's in the right spot and everything's right and you get the permits and all that, you could actually change part of your garage into a living area?
Easily. That happens all the time. People
So,
make them into family rooms. Or
You have to get a city permit.
Yeah, you
Right,
get a-
well,
you get
that's
a
what I'm saying,
permit.
and permits.
Right, you get a permit.
And that would increase the value of the house.
Absolutely.
Okay.
I have another question too, because my house myself is a 4-bedroom. I have 4 bedrooms in there. All the bedrooms have closets, and it is a 4-bedroom. And on my when I pull title, it says a 3-bedroom.
Generally, the appraisers, once you have at least 3 or more bedrooms, the bedroom count doesn't come into a large value factoring. When you reduce from 3 bedrooms to 2 or 1 bedrooms, that becomes an additional adjustment on an appraisal. But generally speaking, when you have 3 or more bedrooms, square footage is the name of the game. Bedrooms and, of course, bath count.
Yeah.
Bath counts do make a difference. Bedroom counts only if you fall below 3. Now you have additional adjustment because 2 and 1 bedroom homes have a major marketing deficiency. When you try to, when they're sold on the market, they don't sell very well at all. 2 and 1 bedroom homes. Generally speaking, unless you're in a retirement area where 2 and 1 bedroom is very common, like let's say the Low Desert in the Palm Springs area, there's plenty of big 2-bedroom homes.
There's some places, some of the older houses too are just the smaller houses. I was working with a client, and they're a young couple, and they were happy with, they were looking at a 2-bedroom.
Right.
But those were hard to find.
Right.
Have you noticed the value of the houses going down any?
Not yet. For the Inland Empire, it's extremely stable and still going up.
Well, I was listening to the radio the other day, and I heard that the values of the property still went up this year.
They are.
They still went up.
Everybody keeps thinking there's a bubble, and it's not been proven out yet at all. Orange County's still stable, not really rising too much. The West LA is pretty soft too, but the Inland Empire is just making records in appreciation.
I heard an expert, he was talking about this, and he was saying it's not a red hot market now, it's just a very, 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 very great market.
Yeah.
So it's
I think next month will pick up again.
Yeah, the entry-level market still has a strong upward movement in the $300,000-$400,000 range. It is strong. It's still moving up, up, up. The listings are still just jumping up. Once you get above $500,000-$600,000 in values, it's a little softer though, but they're still going up a little.
Yeah, I had some listings over to December, kind of set a little bit. But all my listings are sold out. This last week, all my houses I had listed sold this week. I put 3 on the market this last Friday, and Saturday they sold.
Yeah.
That's quick.
So
yeah.
and
it's a hot market.
They're up in
So.
the low 4s in Moreno Valley, so they sold quick. One had a pool, and the other 2 were just regular houses.
Now that's one thing else. On a pool. Now, a pool, when you put a pool in, it's what, about $20,000 or more?
It's not anymore.
Not anymore. They're running at least $25,000-$30,000 up to $75,000.
Okay, let's say
people are putting real luxurious pools in these days.
Okay, let's say you put a $50,000 pool in.
Right.
What does it do to the value of the house?
Okay, that all depends on the price of the homes in the area. If you're in a $700,000 area, you could probably pull back 50 of it. But if you're in a $300,000 neighborhood, you're going to eat it. The value difference is going to be hurt hard because the value of the homes in there won't support that now over improvement. But if you're in a very high-end priced area, that if you're up to $1 million homes, a $50,000 pool is very common for that area, and they'll support it because it's a lower percentage of the overall value.
So it's kind of the area you're living in is whether you're going to get the financial value. Of course, a pool's fun to have, and especially summer here in the Inland Empire, it's great, but you may not financially recoup that.
Well, the best rule of thumb to use on any improvement is don't go more than 10% of whatever the overall value of the homes are. So if you're in a $300,000 neighborhood, try not to ever do any single kind of an improvement like a remodeled kitchen, a swimming pool, or anything like that that's going to be more than $30,000.
Oh, okay.
That's the rule of thumb. Don't go over 10%. One item that would.
Unless it's a pool, something your kids and your family really want. Then
then you
well,
go for
you're
it.
going to do what you do.
Yeah, you're going to go for it, but and that's regardless of you just want to get the enjoyment out of it. Absolutely.
Yeah.
Right. There are things that you can get value out of that's not necessarily financial.
All right. But if you're in a $700,000-$800,000 neighborhood, go put the $50,000 pool in. You'll be all right. You won't get hurt too bad. If you go to sell it, they'll get a buyer. They'll pay it.
Well, that's great. That's good to know. That's good for people out there. Now, on appraisers, you're a larger company. Now, I have had a problem with an appraisal out in Cabazon. That's the Inland Empire as well, I'd consider. Now, I talked
borderline area.
Yeah. It used to, a long time ago.
Cabazon's growing.
It's growing, absolutely.
It was in the middle of nowhere, but with that casino and other things going on, it's starting to grow.
Yeah, absolutely. I can imagine the prices are probably,
they're up there.
triple fold over a few years ago.
Well, this is a manufactured house because the client, they're fairly newly married. They're looking for a lot of improvements. They want the 3-bedroom. They want a lot of things in the house, and the manufactured house was the one that could do it. Now, out in Cabazon, there's a lot of things going on, so not every appraiser does manufactured homes. But you do manufactured homes?
Absolutely, yes, we do. And it's just there's a little extra addendum that goes with it that the lenders want. They have our own little special checklist that they want certain items checked out on those type of properties.
Okay, so it's a little bit extra for a manufactured home for an appraisal than a regular house.
Right.
Okay.
Just a little, just a few, specialized things that they want to be checked out about.
But you go out to Cabazon.
Mm-hmm.
Okay. How far have you gone? I mean, your company. This is going to be interesting.
We cover the general 4-county area of Los Angeles, San Bernardino, Riverside, and Orange counties.
Okay.
So that's our basic area.
Do you have any horror stories or anything that might be interesting on the radio?
Well, when I first got in the business back in 1984, the first assignment I had with Pomona First Federal was to go out to Salton Sea and do an appraisal.
That's on the way to Glamis.
And that was very unusual, and there was no data. We didn't have the luxury of a lot of online
Probably
MLS.
Still isn't no data out there.
Yeah, we didn't have MLS, online like the realtor stuff that the appraisers have now. They've got a lot more tools now that they can use.
That's a funny thing too, because 12 years ago when I first started in the real estate business, I wanted to look up a house for my client. My boss says, "Oh, get that big book." We went over there. There's a book, about a foot big, and that was the MLS.
Yeah, you had to flip through it, right?
It looked like a Yellow Pages on except twice the size.
Well, I didn't have that even on this assignment. I had to go beg. I had to walk into a Bank of America branch down there and just beg for their appraisal data out of they had a local appraisal department. So they were real nice on. They helped me out with some comps, some comparables, and I was able to get the assignment done. But yeah, there was nobody wanted to do it at first. I walk into the department and they go, "Yeah, we've had this one sitting here for almost a couple of weeks. Nobody just wants to go. Hey, you."
You're the greenhorn.
Yeah, you go.
Okay.
So I got my feet wet like that.
That's a long ways, too.
That is. Now, you said comps, and that's one thing that we use because, someone comes in to buy a house and they say they want $400,000 for it, and then what happens? We turn to you and say,
help us produce the support to help do this loan. And so my job at that point is to create a report and go out and do the research and go out and do the appraisal. The appraisal is going to entail coming out to the house, measuring to verify the square footage, and we're going to do a drawing, and we're going to then also collect and take photos of any kind of remodeling and upgrades the home may have, and then we'll also go into the neighborhood and take photographs of the homes that are in the neighborhood that compare to that house and help support as high as, best we can, the value that will help support the loan needed to make this thing happen, to make your client happy.
All righty. Well, what we want to do now is we're going to start moving into another section, but we do support a food program that helps in the Inland Empire, helps the needy and the elderly, and we wanted to play an interview from that. And we will in just a moment here, and we're just about ready to play that interview. Our engineers are frantically working on that.
One of the things Affordable Home Loans does is support a food program through 12th Rock Christian Ministries. Today I have Alexis from 12th Rock with me, and I want to ask you a couple of things. What is your program about?
We bring food to seniors, the working poor, and those in need. We also supplement church programs and give them bread, canned goods, and non-perishable.
And what areas do you cover?
That sounds low.
Well, we work all over the place. Moreno Valley, Corona, Norco, Miraloma, things like that.
That's helping a lot of people, it sounds like. Now, how did you get started?
In 1999, our house burnt down, and we were given a mobile home in a very poverty-ridden area. We saw such great need, and that's how we started the food ministry.
And what is 12th Rock's goal here, the long-term goal?
We want to open a food bank in Moreno Valley. We're looking for someone to donate space or share unused space. Right now we have needs for food donations, shelving, office cubicles, and also office equipment.
So if someone wanted to get a hold of you, what would be the number?
Our number is 951-796-7306.
So again, you're looking for a company that may have some extra space they're not using and could donate that space to the food ministry and be able to help people that way. So please give Alexis a call. And that number again?
951-796-7306.
Thank you.
And there we go. Now, we're going to start doing also a restaurant review. We go out and interview interesting restaurants, and then we're going to be talking to Jerry Chase of the Orange Empire Railroad Museum. He's the marketing manager. But what we're going to do first is play a restaurant review. Hopefully I brought the edited version, and we'll see. We'll find out. And go ahead, Nick. He's our engineer here.
Today's restaurant review is in Moreno Valley. This is Martha's Kitchen. The number is area code 951-247-4522. It's on Hemlock near Heacock. And
That was interesting. I don't know what happened to that. I guess it was too well edited. Is there anything else on that? No. Okay, Nick's going to look at that. Well, in the meantime, we're going to Martha's Kitchen is in Moreno Valley. It's a unique restaurant, and we're going to see nothing's on that tape. Wow. Okay, we had something happen there. Okay, we'll have to do that later in another show. Jerry Chase is with the Orange Empire Railroad Museum, which we visited with Jerry today. It's a fascinating place. It's in Paris, California. Welcome to the show, Jerry.
Thank you.
Now, of course, we walked around there. We were kind of like big kids. Of course, everyone likes trains, at least I do anyway. I felt like a little boy there with all these big trains playing on them. It was kind of fun. But tell us a little bit about the Orange Empire Railroad Museum.
Well, the museum was actually started by some high school kids back in the early 50s, and they saw that the trolley system in Los Angeles was going away, so they thought that they might pick up a few of these trolleys and maybe restore them and possibly even get them to operate. So they were initially in Traveltown in the Griffith Park area, and they were told they could stay as long as they wanted, but they decided not to because they wouldn't be able to bring any more items into their display area. So they moved out to Paris and bought about 8 acres to start with, and they started the Trolley Museum in Paris in 1956. And they actually got their grounds. They started working on it, developing lines and generating power for themselves so that they could run these trolleys. So since that time, now the museum consists of 80 acres and has over 200 trolleys and trains on it. And we have 7 car houses which we put our trolleys into so that they don't deteriorate. They're not exposed to the elements.
Now, these are not just sitting there. I mean, some are, but are there some you can actually ride?
Yes, as a matter of fact, every weekend and some special holidays, we run our trains and trolleys. You're able to ride them. These are restored items that people can come into the museum and ride them. And they go from 11 o'clock till 4:30 every Saturday and Sunday. So you can ride the train to Paris and back. It's about a 20-minute ride. And also the trolleys. They'll usually bring out a couple of trolleys and let you ride around a half-mile loop.
I wanted to ask you a few questions because I came with Steve this morning, and then, what I liked is all the workers who work there actually they're volunteer workers.
Yes, they are.
Okay, and they're all dressed up in bib overalls, and they look like railroad people.
They do.
They really look like railroad people.
Like a whole town of railroad people.
Yeah, they look like a little town. They all have beards, and we went several different places out there. I was quite surprised that they have their own shops there. They have a wood shop where they do a lot of their woodwork to restore these, and they also have a machine shop. And we actually got to talk to some of the machine people there. They're still in bib overalls, and they look like trained people. And it was very interesting what I saw today.
Well, yeah, I mean, we went into one of the train houses, and there was a gentleman named Paul there.
Yes.
And what do we do there?
Well, we got to see a steam engine that was built in 1881. It's called by the Baldwin Locomotive Works. That used to be owned by Ward Kimball, who was an animator for Walt Disney from 1933 to 77. As a matter of fact, if you've been to Disneyland and ridden the train around the periphery of the park, you will have ridden in a train that almost looks like that one that we have. And we were fortunate that one of the fellows that supports that particular car house was there, and he allowed us to get on one of those cars, which was really great. That was the first time I'd been in it, and I'm the marketing manager.
Yeah, we got to see a lot of places that the normal tourist doesn't get to see inside. We got to go inside a old caboose, and we got to go in that trolley car. It was very nice, very nice.
Now, one of the things is, of course, it has it's fascinating to go there. I just love walking through that. I don't get there often enough. Last time I was there was many years ago, unfortunately, but I'm going to come back very soon. Now, where is the Railroad Museum located?
Located in Paris. At the actual address is 2201 South A Street. So basically, if you were taking the 215, you'd get off in Paris and take the 74 West off-ramp, and you go up 4th Street, which is the main street through Paris, and turn left onto A Street, and it's about a mile on the left-hand side of the road.
Actually, I've been down there several times. I've been past there. Today was actually the first time I went inside, and I was very impressed. They have a little store there where they sell books and little train items, and they also have, a swap meet?
Yes, we have a swap meet coming up. We put one on twice a year.
Yeah.
One in March, and then we have one in September. So we have a spring and a fall swap meet. And basically what happens there are the people sell train-related items that they have owned for however long. They bring it to the museum. They sell it to the public, the people that are interested in buying train items.
Actually, another thing I saw down there, I was surprised the Boy Scouts were down there. Did you see that scene?
I saw the tents
and
out
actually
there.
They were camping there, and I thought that I was pretty impressed with that, because we're big in the kids and things for the kids to do, and I was really surprised that the Boy Scouts were there camping, and I thought that was a great idea.
Now, what do the Boy Scouts do down there?
That's actually part of their merit badge program. So the Scouts come there, and they'll get to learn something about trains and trolleys, and they're given a tour of the facilities, and then they do camp out, and they'll do some type of a project that is craft related to trains.
So they help a little bit on the restoration.
Yes, they do. They do a slight amount of work. We have to be careful with that, of course, because the restoration is to be exact.
Now, the one thing is, I think the restoration being exact, the people that are doing the restoration of these trains, now you have a lot of vehicles there. You have carriages, you have the trains themselves, and these people get assigned a certain train to restore?
Yes, that's dependent on the volunteer's interest, of course. But if they take an interest in restoring a particular train or trolley, then someone will work with them, because we have books, we have all sorts of materials above the gift shop, and we have all the specifications that pertain to those items.
So, do people get possessive about the trains they're restoring?
Some of them do, yes. It becomes their pet.
I seen one there I would like to have. I'd like to restore it and work on, but it's very interesting.
Yeah, the one thing that was fascinating is looking at these things. It's like going back in time, because they have all periods of trains from 1800s on up.
Yes, we have them from 1880 all the way through about 1965.
Now, a lot of these ran like downtown Los Angeles, and what are some of the other major cities that they've run?
Some ran in Los Angeles, and that particular locomotive that you saw, Emma, Nevada, ran in the northern Nevada area. It ran on a 70-mile track, and that was basically for supplying miners in the northern Nevada area. That location where the museum is was actually a train station that came out of Oceanside, went through Railroad Canyon in Elsinore, and through Canyon Lake, and then that was one of the stops that supplied the miners in the Paris area. That used to be a big mining community.
Now, that's a fascinating part in itself, because it wasn't Paris. It was another town.
Yes, it was, and the fellow that started Paris, Mr. Paris, was a developer. He wanted to build homes, so he started developing homes in Paris that people could buy and own, and those were some of the people that worked the mines.
But what was the town where the station is?
Pennicati.
Pennicati. So yes. It was Pennicati there,
yes. Uh-huh.
And there's actually a building from the 1800s that is there.
Yes. Yeah, we have a little house there. I don't know if we didn't really get to stop there, but there's a stone house. That was the general store, and that's a state monument, by the way. And they actually had a postmaster. He was the man that ran the general store. He was made a postmaster. He'd take his horse and buggy, ride to Riverside, pick up food supplies and things for the miners in the area.
So he actually supplied them, and he also was the postman. That was great.
Yeah.
Now, is that little one next to that big rock?
Yes, that's the one.
That was the general store.
Yes.
People, you have to come out and see this. You have to come to the Orange Empire Museum in Paris, because it's fascinating just looking at this building and thinking it's a general store. I go up to Calico sometimes. They have a general store, but this is a little thing, but it's impressive. Now, you're saying that,
I'd like everybody to go out there and see this, because this is ran off donations, and they need the money. It takes money to restore these. I've seen a lot of them that they have ready to restore, and they need people to come out there and see this museum.
It is. It is fascinating. Please come on down. And also, what's the program? If you want to volunteer and help, now, there's a program to that you actually get benefits other than just helping to restore.
That's right. You can actually be a member, and as a member you can volunteer then on these different projects. And as a member you're also allowed to come to the museum any day, especially weekends, which is when we run our trains and trolleys, and you ride for no cost.
Now, the phone number for the Orange Empire Museum, what's that?
It's 951 area code 943-3020.
And that's the office, and the information line is 951-657-2605, and that'll give the hours. Now, does it cost anything to walk on the grounds?
No, it's absolutely free. It's open from 9 till 5, 7 days a week. We're only closed 2 days a year. That's Christmas and Thanksgiving.
Now, is there a place to, if someone wanted to have a picnic down there and then go down?
Yes, as a matter of fact, we have 2 park-like areas that people can bring their picnics and sit around the trees and the tables that are out there for them.
Do you have a website?
Yes, we do. It's oerm.org.
O-E-M?
O-E-R-M.
O-E-R-M.org. There it is. Okay, well, yeah, please come on down. We've just got a minute or two left. Next week we're going to have a giveaway, so be listening. What are we going to be giving away?
A colored TV, still in the box. I believe it's a 21-inch colored TV. Listen to next week's show, and we're going to tell you where you can find us and pick up your colored TV. First one there gets it.
That sounds great, Mark. So you're listening to the Mark and Steve Show on KCAA 1050 AM, leaving no listener behind. This is Mark and Steve, and please call us at Affordable Home Loans if you need to refinance or to purchase a house. We have Realty Plus, a sister company. So call us 951-247-1113. That's 951-247-1113. Thank you, and we'll talk to you next week.
KCAA.